Hey guys, good afternoon, everybody. Today is Monday, February 27th. It is 2:01 p.m. today. It is our scheduled mentoring sessions for 2 o'clock. So starting just on time. I'm going to go ahead and set up this room real quick, and then we will get started shortly. So there's a couple of things here to update. And then I'll get this link sent out to you guys here in the premium. All right, looks good. Let me get this link sent out to you guys over here, and we can get started with our session for today. Looks good. All right, so links posted up to the premium group. I'm going to go ahead and post this up also to the public group as well. All right, so I'll get a few moments for people to make their way in. It's like people are joining in right now as we speak. Let me get this link posted up over here as well. All right, perfect. All right, guys, if you guys have any questions, feel free to put your questions in the chat. Good afternoon, guys. It's Monday, February 27th. It's 2:03 right now. Scheduled mentoring sessions for 2 o'clock. We're starting just on time. So if you guys are just joining, if you guys have any questions that you guys want me to cover, go ahead and put them in the chat, and then we can cover whatever you guys need help with. It's going to post this link up over here in the Instagram real quick. And we should be good to go. All right, so all right, links posted up, and it looks like we are good to go. So, all right, guys, welcome to the mentoring session. If you guys have any questions, or you guys want me to cover anything specific, drop your questions in the chat. Otherwise, we don't really have much to cover today. The only thing that I really have in mind is probably reviewing a couple of the entries that came up today during the live session, or I can just check, other entries that came up all throughout the morning. So I don't really have anything on the agenda today, guys. Anything that you guys want to cover, just drop your questions in the chat, and then we will look through them. But yeah, for today, we just had one trade. The trade technically hit TP if you held on to it. For me personally, I pulled out for a small loss, and then I made it back with a couple other trades following it. So I'm like slightly in the red for this week, which is not too bad. You guys can see here for my profits, I'm down 600 on my FTMO and then 1,000 on my MFF. So I just need one trade and I'm going to be back in profit. Not a big deal. Probably cash that tomorrow during the live session. But anyways, going to that trade. So let me see if I can find it over here. I'll pull up that trade that we took on the live session. It was right here at it was early in the session. Like right here. No, not 8 o'clock. It was like at 6. Yeah, it was when the market was moving kind of funky. All right, so it was like right over here, I think. Yeah, it was at 6:36. So there was a couple issues with this trade here, but I took it because I felt like it was going to look a bit. It looked like it was going to keep pushing up. I mean, obviously, price was bullish today. It did play out. It was just that I was trying to figure out this, or not figure out, but I was trying to test out this, new theory where if the trade doesn't hit right away, I pull out within the first 3 candles. So let me go over here real quick and I'll just maximize this chart. So the entry that we took today, the one that I took a loss on, which technically was still a win. The reason why I took it, for the reason I pulled out early, and then also the reason why I didn't hold it to the full move, because I'll put their criteria here. This entry is for both a momentum scalp momentum scalp variation, and then also a momentum scalp entry. So this strategy here had criteria for two different strategies. The first, well, basically both of them. So for the first one up here, the momentum scalp variation, first you want to confirm the overall trend on the 1 minute, 5 minute, and 10 minute time frames. The trend here wasn't really confirmed on the 1, but it was bullish prior, so I was kind of okay with taking a buy here. Looking over here on the 5 and 10, obviously price was very bullish here, right? So I was okay with taking a buy at this point. For the next step over here, we want to confirm that momentum aligns on the 5 and 10. So in order for us to take a buy here, we got to make sure that it's bullish here on the 5 and 10. So we got a buy signal right here on the 5, and we got a buy signal right here on the 10. Having those 2 buy signals right there, that's going to be the second criteria. So looking at this right here, first step, confirm overall trend. We already confirmed everything here is bullish. Second step, you want to confirm momentum aligns on the 5 and 10. We did that. We confirmed that it was bullish in both time frames. Third, you want to confirm retracement momentum signal on the 1 minute. We actually had that right here prior. So let me go over here to this prior red candle. It was this one right here. So this red bar right here was step 3, confirm retracement momentum signal. Wrong one. I meant this green one right here. Or wait, my bad. I'm throwing myself off right here. Yeah, I meant it was this one right here. So price was bullish here, and we had a momentum signal coming in the opposite direction of the trend because obviously price is bullish here. Price came back, retraced right here. This red bar confirmed the retracement. So step 1, confirm overall trend. It was bullish. Step 2, confirm that momentum aligns. It was bullish on the 5 and 10. Step 3, confirm retracement momentum signal on the 1 minute, which is right here, the sell signal. Step 4, you want to confirm price closed past the pivots in retracement. So on the same red candle right here, price was pulling back below the pivots, right? This is the retracement that we're talking about. So with price retracing right here, that's going to be step 4. Step 5, you want to confirm price closed past the pivots in correction. So that's where our entry happened right here. Once we confirmed pretty much all the steps, our entry was on this green candle right here. So we were waiting for the candle to close right back above the pivots over here. And then we would enter this trade at the close of this candle. So here's where the problem arose, because opening price is right here, right? If you guys remember the red flags, the problem with this right here is that if we go for the full 25.50, which is what was necessary for this trade, because you can see how far the range is, right? If price was to retrace back, you need that space there to catch it so that if it does push back up, you can survive this move if price retraces back, right? However, for this thing here, price was at this opening price. So in order for us to hit our profit target, we would have to get past this area, right? So what I did, or what I technically did, was I entered with this type of entry in mind, but then I was only aiming for about 100 pips. So instead of going for the 25.50, I was technically going for the 10.30, but you can see how this is too close. The stop loss is just way too close right here. If this retraces down, it's going to stop you out, right? Because it can just pull down here. As soon as it pulls down to this point, it'll just spike all the way back up. So for this right here, you were technically supposed to take a 25.50. And then with that 25.50, you're supposed to let the trade run. So the criteria that I was using, the reason why I lost this trade was because I manually exited the trade. Typically, you're supposed to just hold on to it. But from my experience and from my testing, I figured that these trades typically hit right away. Like if you look back to anything that happened over here in the pre-market, so there was a couple entries right here again, momentum scalp failure and momentum scalp variation right over here, right? If you look at these entries right here, you use a 10-30 split, for example, this entry right here, use a 10-30 split because that's the range right there, right? You're not gonna use a 25.50 for this because price wasn't really moving too much. So if you took that trade right there, you can see that it hits like in the next couple candles. The next entry right here would be a momentum scalp variation. Same thing right there. It ends up hitting in the next 2 candles or so. Momentum scalp right here, another entry. It ends up hitting on the next following candle, right? So you can see from these previous examples that these trades hit right away. So the problem with this trade over here was that this trade was kind of bouncing around for a long while. Price kind of bounced around for a bit. And when prices are around this area, this is where I pulled out manually. I could have held on to it. A lot of people did. And the people who did hold on to it, it ended up pushing right back up and blasting right through TP, right? So you could have held on to it, but the way that I'm looking to approach the market right now is because the market is not very directional, is that I'm trying to get out of these trades as quickly as possible and minimize my risk. So I lost about close to 3,000 on this trade here. Not a huge deal because I made it back on 2 other trades. So now I'm only at negative 600. So it wasn't really a big deal. Initially, I was down, 1,000 or yeah, initially I was down like 1,000 or 2,000 something. And then I took one trade, I was down 1,700. And this is how, everything kind of balances out. Now I'm negative 600. So it's not a lot. It's just one more trade. I'm going to bounce back from it. So if you guys have any questions regarding this specific entry, feel free to let me know what you guys want me to cover. Otherwise, we have one question here from Shaka. So I will look over and I'll answer Shaka's question if there's nothing else that you guys want to see. But this is the entry that I took today, the entry that I personally lost. You didn't have to pull out. So if you're following the strategy as it's supposed to be applied, you could have just held on to it. The problem with this entry here is that this probably should have been skipped because it was at a red flag, right? But for me personally, I don't know, I just felt comfortable with the position. Everything looked like it was going to go up. But then obviously the market was kind of messing around a bit. And then I ended up taking it. And I ended up getting caught in this trade here. So, for future reference, I probably should have just skipped this trade because of the red flag, but it is what it is. This stuff happens sometimes and people make mistakes, including myself. So just want to show you guys there so that you guys understand the reasoning behind why I took the loss on this trade, even though the trade technically won. I could have held on to it, but it's all good. I'd rather have minimal loss rather than having a $5,000 loss for like eating this move right here. Because if I would have held this move and price would have came down here, I would have had a $5,000 loss to start the week, right? And I'd be screwed because this whole week I'd have to like climb out of that hole. So I prefer to just cut it at like 2,000 and then take the next trade after that and win, and then be back in profit rather than, kind of pray that this trade's going to play out and then it doesn't play out and I end up getting, put in a deep hole. So for me personally, that's why I pulled out of this trade early. But for the people who held on to it, there was a good amount of people who held on to it. Like CERN over here took it, held on to it, made profit. Zach as well. He took the buys over here from this morning, total profit of 3,000 for those 2 buys. And he took another sell right here after. Shannon over here was up 326. We had Sisuk over here up about 5,000 for the day. He took those buys right there. You can see the timestamps. So he actually held on to them. He held on to them, right? Rode them to full TP. Perfectly fine, however you guys want to apply it. But I'll give you guys different options because I know some of you guys here aren't very comfortable with the negative risk reward. So if you aren't comfortable with it, then this is going to help you with it, because if it doesn't hit your profit target within the first 3 minutes, then you just cut out for a small profit or a small win, and then you move on to the next one because there's going to be multiple entries. So exactly. Yeah. Song said Max Pain. That's really what it is. It's like figuring out where your pain points are and pulling it, right? So for me personally, I don't like taking very many losses or losses at all. So I'd rather just minimize my loss, bounce back on the next move, because these entries are going to come up. Like Song over here, actually, if you are in the premium guys, Song over here posted the trades that he saw for today. There's a lot of entries that came up, right? There's like 1, 2, 3, 4, 5, about 5 entries right here, and they all hit full TP, and they all hit within the first 3 minutes or so. So there's a lot of opportunity out there. It just depends on how you guys want to approach the market. So, all right, that's it with that question right there. Question from Shaka. So Shaka is asking, Sean, can you share some light on the concept of overtrading? Earlier this week during London session, multiple entries come simultaneously of the variation, and I enter them before the previous entry closed. What's considered overtrading? 2 running trades, 3 because the requirements were met and they hit full TP. What do you advise? So the thing with overtrading is that it just depends on the person, Shaka. Like, for example, you mentioned that there's a lot of entries that come up back to back, right? For me personally, I consider overtrading, in my perspective, basically over leveraging. So if you want to take multiple positions like that, Shaka, then you can take a smaller lot size. You don't have to take a full lot size, right? So for all the trades that I take, because I typically only have like 1 trade running at a time, I'll take maybe a 3% risk, right? Maybe a 2 to 3% risk. Because if I'm only taking one of those trades, if I lose the trade, I'm not going to hit my max daily loss, right? I'm FTMO. Max daily loss is 5%. So if you want to take multiple positions like that, Shaka, it's perfectly fine. Just lower your risk. So instead of taking a 2% risk per trade, take a 1% risk or less, right? Because if you do the math, I mean, technically, if you're doing like, so here, I'll show you the difference here. So my style, I'll make it a little bigger too. So entering trades. is high quality, heavy volume, quick entries, right? This is basically how I trade. Like when you guys see me take my trades, I'm only taking like a couple trades at a time. So this is like typically how I would trade, right? High quality, heavy volume, quick entries. So like I'm looking for entries where a lot of confluences are met. I take a pretty decent lot size, usually 100 lot per trade that I take, because I'm only taking like one entry, right? So if I'm taking 100 lot size with a 300 pip stop loss, that's going to be about a, I mean, it's 3,000, of course. So I have a 400K account. I'm actually taking, well, technically I should be taking a 200 lot because I'm on a 400K account now. So I'm on a $400,000 account divided by 3,000, right? Or sorry, 3,000 divided by 400,000. So I'm basically risking 0.75%. So I'm risking less than a percentage point, less than 1% per trade. So I'm taking a so I'm actually like I should be using, typically I would be using a 200 lot size since 400K count now. So generally I'd be using a 200 lot size, and if I was to do that, I'd be risking just double this, right? So I'd be risking a 1.5%. So this is typically how I would trade. If you want to take multiple entries at once, it's fine, but lower lot size. So yeah, you know, for me personally, the way that I wouldn't necessarily say it's over trading. I would say over leveraging at that point. So Shaka, when you're taking trades, if you want to take multiple trades, like you mentioned, you saw multiple entries come up and they all hit full TP, you can do the same thing, but you probably want to take a lower lot size. So for me, I'm already taking a lower lot size because I'm trying to be safer on this account until I'm comfortable with the 400K, because you know it's a different ball game, and you're trading a big account and you're taking bigger lot sizes. So for me personally, I wouldn't consider it over trading. So here's my definition of over trading, right? So for you actually have a I wouldn't consider what you're seeing over trading. I would do this. Like, for example, if you see an entry here, I'm going to see if I can find one. So, okay, so there was an entry, there was an example that I was showing you guys earlier right here, right? So this was a momentum scalp failure. This is pre-market. You see a momentum scalp failure right here. This is a valid entry. So you could take this. If you want to take one trade at a time, like I personally do, you could take it with a normal lot size, right? Risk from a 0.75% risk to a 1.50. So for me personally, if I was to take this trade here, I would take this and then I would take a smaller lot size like that. So even though there's two trades here running, you technically take two, right? So if that's what you're doing, because if you guys have seen me when I take trades, I'm not taking all of them. So I almost never take the momentum scalp failure. So I typically don't take this one here, but I do look for these other two, right? The momentum scalp variation and momentum scalp. So that's another reason why I use a smaller lot size, because I can enter both trades and not have to worry about my risk. Because if I was to lose a trade, you know, if worse comes to worse and I lose a trade and I lose both of them, then I'm only risking 3%, right? Because each trade's about, or I'm not even risking 3%, I'm risking about 75%, 0.75%. And I'll only be risking this much if I lose both trades, which is nothing. Because if, you know, you do the math, you lose up to 5% per trade. So for me personally, the way that I would consider over trading, Shaka, is if you're taking these two trades here, because you know there's two that came up right here, momentum scalp failure, this one's still technically running. And then for you, like the example that you mentioned, if you saw this one here, you enter two at a time, right? If you're doing this and you're just looking for every single entry, but you're using too big of a lot size, okay, so there's like, yeah, there's two right here. Or what I see people do sometimes is they miss this entry, and this is fine. You can do this if you're okay and comfortable with it. But I see a lot of people miss the entry here and they try to get in on the next one. So they don't realize that there's only one momentum scalp variation that can come up. So there's one right here, and some people think that this is another one, but this isn't, because this one's still technically running. This is the momentum scalp variation. So I'll see people enter multiple positions right here. So I think your aspect of overtrading is a little different from like what we actually see overtrading as. Overtrading is when you like you get greedy because you see a lot of these entries coming up, or you think price is going to shoot up from this point, and then you keep entering more trades. So if they're valid entries, that's perfectly fine, but you just want to make sure that you're using proper risk. So like for me personally, I'll probably run maybe 2 trades at a time at very max, and most of the time I'll never do that. Only if it's like a very, very probable position, right? Because the thing is, if you run 2 trades at a time, like say, for example, like for me, I'm only taking a lower lot size, right? So I'm risking this much. If I lose both trades, I'm fine because I'm only down 1.5%. If you take each trade and you're doing 1.5% each, that's now at 3% risk, right? So if you have slippage and price spikes past it, you lose a little more than you're supposed to, you're going to be at a 4% risk, close to 5. If you hit 5, you're going to lose your FTMO account. So does that make sense, Shaka? I know it's a little different. And this probably doesn't pertain to your question, because your question doesn't actually pertain to overtrading. It would be overtrading if like you're taking, and I've been victim of this too. So like, you know, you guys will see me sometimes take speculative moves. Sometimes I'll see an entry here. Like for example, we have a momentum scalp failure here, and then we have a momentum scalp variation. And then say, for example, I see this rejection right here, but see, I see a rejection happen on multiple time frames. I've done that too sometimes, where I end up taking a trade here. There's no specific strategy, but I see an entry here and I take it and then it hits. That's what I would consider over trading. So for me personally, I think 2 trades max at a time is fine, because it's kind of hard to follow if you have like 3 or 4 trades running at a time, especially if you're scalping, because you're usually in these positions for only a few minutes. So for me personally, I think 2 trades is as far as I'll go personally. Some people go up to 3 trades, but anything after 3 trades at a time is huge risk, because at that point, if you lose all 3 trades or all 4 trades, you run the risk of blowing your account. So yeah, no problem, Shaka. If there's any other questions, guys, you know, feel free to put your questions in the chat. We don't really have any questions lined up for today. So, you know, this session will go on for as long as you guys like. If there's any strategies here that you're confused with, if there's any examples that you guys want to see, if there's any entries that you guys thought about taking today, you know, just go ahead and drop your questions in the channel. I'll pull up whatever you guys, you know, need help with. This session is meant for you guys. So whatever you guys need clearing up on, or some fine tuning, I can help you with that. If you guys need help with, I know, well, basic functions, right? Like drawing these horizontal lines, I can help you with that too. If there's issues with the indicators, let me know and I can help you with that as well. Let's see, Johnny's asking, yo, Sean, what's up, Sean? How do we purchase YM data on TradingView? So you'll go to the TradingView website. Let me see if I can pull it up over here. So on the TradingView website, you'll go to your account and billing. And then you go to extra data subscriptions right here. You click on add extra market data. It'll pull up the TradingView website. And then from there, you can choose a CME. So you guys can see right here that I'm paying for CME. When you click on this right here, it'll pull up the extra subscription data. And you're going to choose this one right here, CME group, E-mini included. CME, CBOT, COMEX, NYMEX. Yeah, this is the one that you would add on to your charts there for YM. It's about like $4 a month, so it's not that bad. I mean, it kind of pays itself off if you have like one winning trade. So I personally think it's worth it, but you don't, it's not like 100% necessary, especially if you're on the live sessions. But that's how you would get it, Johnny. You just go on the TradingView website, go to your billing settings, and you can add it from there. And they charge you monthly, so you can cancel it whenever you like. Let's see. All right, so I don't see any other questions, guys. If there's any other questions, drop them in the chat. Otherwise, I guess we can look over some more examples from today. Let's go and play this here. I know there's a couple entries that you guys showed that you guys, or let me show you guys the entry that I took after the live. So there's one entry that I took after the live, guys. It was a quick entry. It was it was this one right here, I believe. Yeah, it was a momentum scalp variation. I pretty much wrote it down to news price right here. Okay, so it was this one. right over here. So this entry came up at 8:02. This is like literally right after the live. I saw this as soon as I was going to log off, and I just took it because it looked like a good entry. So yeah, so price was down here already. Now let's go and replay this 10-minute time frame too. All right, so as you guys can see over here, price was obviously bearish at this point. So price is bearish on the 10-minute, price is bearish on the 5-minute. We got off the live over here at 8 o'clock. And then as soon as I was going to log off, I saw this right here close below the pivots, and this was a momentum scalp variation. So let me show you guys real quick. I'll put the criteria here. This is the last trade that I took that kind of minimized my losses. So this is the last one right here. So I was negative 1,700, and then I took one more trade, and then now it's only negative 600 because or let me see if I can still screenshot my account. I don't know if I can. It probably reset for the next day already. Yeah, the thing already reset. Anyways, this was the entry that I took here. So this was a momentum scalp variation. Looking at the overall trend here on the 1-minute, 5-minute, and 10-minute time frames, obviously everything here is bearish because price is below the pivots. Trend meter is red. Pivots are angling down. So with that said, we have an overall bias here for a sell. Second confirmation, confirm momentum aligns on the 5 and 10. Sell signal right here, sell signal right there. Everything lined up perfect. Looking over here at step 3, confirm retracement momentum signal. That retracement signal came up right here. This green buy signal. So price retraced up right here. Step 4, confirm price closed past the pivots in retracement. So price was down here. It retraced up. That's step 4. Step 5 is confirm price closed past the pivots in correction. So that's when price pushed back down right here. And on this specific candle, that's where it closed below the pivots right here, right? So once we line that up right there, that's where I entered my short position right there for 100 pips. Went for a quick little entry. Let the trade run around for a bit. So this one I actually held on to for a little bit because I just stepped away from it. I took the entry, I stepped away, and then it finally hit TP right there. And that's when I got out. So this is the entry that I took after the live. You know, if you guys have been following the market, you guys will see that the market lately, just for this month, the market's been moving a lot smoother after the live, which is kind of annoying because we get off at 8. As soon as the market gets off, there's more direction here, right? Price just keeps pushing lower and lower. There was another entry that came up right here. This was a momentum scalp entry. So there was actually 2 entries that came up right back to back. There was this one right here. I didn't follow my 3 candle criteria for this one because I stepped away. I just took the trade, stepped away for a bit, came back, hit TP, and then same with this one over here as well. Another entry for a momentum scalp. It's just a lot of sideways movement for, you know, US 30 today, or YM. So that's all I took. After I took this, I was pretty much done for the day. There was a couple entries that came up, I think, further. Yeah, good thing I didn't trade over here because you guys can see how the market got kind of messy at this point. There was another momentum scalp failure that came up right here, it looks like. Momentum scalp failure off here, and then momentum scalp variation that happened right after it. Yeah, so that would have hit TP right there. And then there was another one right here. This candle closed right below it. Another full TP right there. Sell signal came up right here. So there was actually a lot of entries here that came up after the live session, but price was moving sideways. So it wasn't necessarily the best market to be trading in, especially with all the red flags down here. So I'm hoping the market does start to move more directional next month. This is an NFP. So typically for NFP, the market would move a lot, not smoother, but it'd move more directional. But for tomorrow, let me see if there's any news. So tomorrow we have pre-market good trades balance, prelim wholesales inventories, HPI, S&P composite, Chicago PMI, CV consumer confidence, and Richmond manufacturing index. We have a couple of news events coming up tomorrow. I think main thing would be the Chicago PMI, and then obviously this high impact news right here. Then we have Fed member Goolsbee speaking tomorrow at 11:30. Fed member Goolsbee is new. I've never heard of Goolsbee before. I think they just replaced the other one that's now working for the president. I forgot who got moved up, but someone else got moved up and they added someone else to it. Yeah, other than that, I don't really see any other news for tomorrow. But we do have some news tomorrow. Hopefully it'll push price around. Other than that, Wednesday, we have ISM manufacturing PMI, final manufacturing PMI, some inflation news right here. Thursday, we have unemployment claims, natural gas storage. So I think this is, well, I don't know if it's Fed week. Let's see. I don't know if this is considered Fed week, but there's a Fed member speaking every day this week. So today we had one Fed member speak, Fed member Jefferson, speak at 7:30. Didn't really have much good to say about the economy, so kind of came down a little bit. Tomorrow we have Fed member Goolsbee speaking. On Wednesday we have Fed member Kashkari. There's a lot of new members here. I've never heard of these names before. Goolsbee and Kashkari are brand new. I've never heard of these people. I think they're starting to switch out people from the last year. And then we have Fed member Waller and Kashkari speaking again on Thursday. And Fed member Logan speaking on Friday. So every day this week, they have Fed members speaking. Next week is going to be NFP. So next week, we'll definitely see a lot more direction. It's going to be the first full week of March. So I'm excited for March because February hasn't been so great. So I'm hoping March is going to be a lot smoother and more directional for us to take these scalp entries. So I think that's it for today, guys. I don't really have much question. I was hoping people would have questions so we'd have stuff to cover, but if there's no questions today, we're probably just have to cut this early. If you guys have anything, literally any questions, guys, there's no dumb questions here. If you need to figure out how to turn on the indicators, drop your question in the chat, whatever you guys need help with. If you want me to review a strategy, feel free to drop your questions in the chat. I think this is probably one of the shortest mentoring sessions we've had all year. Typically every mentoring session, there's been a lot of questions. So we've been on here for over 2 hours every Monday and Tuesday. But for whatever reason today, nobody has any questions. So, if you guys are good, then that's great. I'm just putting it out there that I'm here to help you guys out. You guys don't have to have questions, but I want to make sure that you guys are prepared for this week. Also, this week's been super choppy. So don't worry if you guys either are not making a lot of profit this month, or if you guys are not being consistent, because I think that's been the case for everybody. February has been a very choppy month for everybody. If you look over here on the clean chart, so what I'll do here is I'll just go to the 1 hour. All right, so if you look at the charts here from the 1 hour, you guys will see that there's basically no direction. Let me just mark up from January 31st. All right, so if you guys look over here and see how the market has been moving for this entire month, there's been no direction, right? So if you just look at every single day, there's a lot of spiky candles right here where price will spike down, spike up, and it'll just go sideways for a long time, right? This is not the type of market that you really want to trade in general. Especially for us, because we're scalping and we're also trading the direction of the trend. So if price just goes sideways like this, there's no real direction for us to take, right? Because we're kind of just hopping into trades as price bounces along. You guys can see over here from January, there was way more direction. So this was, we made a lot of profit in January. So we started off the year proper, but now the market's kind of slowed down. I think the market will pick back up. It's just a lot of the news is causing uncertainty. But you guys can see over here, there's going to be some days here, like in January, where price goes sideways for a bit. But then eventually price does start to move into stride. Price pushes up, retrace, continues up, etc. That's typically how the market does move. And then again, in the opposite direction, price comes below. And it does the same thing in the opposite direction, right? This makes it easy for us to take entries here because we can just take every buy. Like for example, if I was to turn on the trend meter here in the pivots, and momentum, like you guys can see here how easy it is to just take these entries that go in one direction, right? That hasn't been the case for February. Right here, price will just keep going up. And when price comes down, we just take the sells in this direction. And then price swings back up, we take the buys over here. But if you look over from February, this is like a lot of sideways movement. There's not really much of a trend to the upside or a trend to the downside. So it is a little difficult for us to really nitpick for entries here, but there's obviously no direction here. As you guys can see, I'll just turn off the momentum indicator, and you guys can see here as well. See how a lot of these momentum signals overlap. If you look over here in January, you don't have that many that overlap, right? You'll have like a couple here, and then you won't get another signal for like maybe another day or so. So like, for example, here it's all buys, here it's all sells, and you have a couple overlaps here, and then it just continues on for more buys over here. Vice versa over here in February, we just don't have that. But this is a good thing too. So don't take this as a bad thing, guys, that the market sucks for February, because if you guys can make profit in this type of market, you can make profit in any type of market. So I think it's better for a lot of you new traders as well that you guys are experiencing these choppy markets early on, so that when the market starts to move smooth, you guys can see the difference. And I think that's the main problem with a lot of people. With a lot of people, it's harder when people have a lot of success right in the beginning, because when you're really good at trading, or you have like really good trades in the beginning of your trading career, you're not really experienced with losing. So when you start losing, you start to question your strategy, and you start to question the way that you trade. But right now you're like in a pretty choppy market where it's hard to find entries, so that when we do get to a directional market, you're going to see that things are going to start to flow more in play. You guys can see that the market has been a little bearish lately. So I'm hoping that the market stays this way. It either stays bearish in this direction, or, if it ends up swinging back up, and that's perfectly fine too. If price wants to correct back up, then I'm perfectly fine with price going back to the upside. And we basically just take all the buys that come up here. So we'll see what happens in the next couple of days or so. I think in March, the market should start to smoothen out. Let's see, question from Andy real quick. Andy is asking, if we want to practice trading outside of the live session, what hour sessions would you recommend? So you can still continue to trade in the morning, Andy, if you want to. I would recommend probably opening like a trial account or a demo account though. So I wouldn't necessarily recommend you trade on your personal account yet, or your actual account, until you're comfortable. But so basically, and mark up over here real quick. So, or here, let me go over to or I guess I can just show you here, or let me show you yesterday's market, or last week's actually. So the times that I typically trade, and lately I've been trading outside of the live session times, just because like a lot of the entries come a little later. But basically the way that I personally trade myself is that I will trade, okay, so we'll just start from Thursday. I'll just show you an example for Thursday when I trade. Typically I'll trade pre-market sometimes if I see something good. So I'm typically up and on the charts rate at 5 o'clock. So basically from 5 o'clock until 6:20, I'm looking for some trades here. If you want to trade pre-market, this is my pre-market time right here. You guys can see how there's some movement. Price will drop down a little bit. There's typically news always at 5:30. Whenever there's pre-market news, it always happens around 5:30. So this candle right here, you can see how it's a big crazy candle. That's because there was news here at 5:30 on Thursday, I think. Let me check last week. Yeah, there was high impact news right here. Prelim GDP, unemployment claims, 5:30 a.m. Usually if there's pre-market news, it's at 5:30. So what I'll typically do is I'll wait for this to happen, and then I'll take a trade like after it. So I'll see how price reacts. Typically when price drops like this, that's why I mark up news price. Because if, like, say for example, we have a bullish bias, right? Because you can see over here that price was bullish before the news event happened. So if I go and just replay it to this point over here, well, I'm not going to replay it because it's going to mess up the chart. But if we were looking at it from this point here before the news happened, price is bullish, right? Because you can see the trend meter down here was green. The pivots over here as well were indicating a bullish trend. So when I see something like that and news does the opposite of where price is technically supposed to go, I typically expect price to correct back up to where it needs to go, like basically correct back up to news price right here. So price drops down based off news, and I'm expecting it to come back up right here. So if you want to practice outside of our live trading times, I would trade between, well, I would make sure to see if there's news. So make sure you check Forex Factory in the morning or my FX book, one of the news websites, Andy. And then if you see news coming up here at 5:30, then I just wouldn't trade until 5:30. But typically I'll trade between 5 and 6:20. And then from here, it's usually, I give it a little buffer, 10 minutes between 6:20 and 6:30, because this is when we go live. Market opens right here at 6:30. So between this buffer right here, I don't want to be in any trades, because I don't want to be in a position and then market opens and it ends up spiking, right? Because that's typically what happens on open. So for me personally, I will trade between pre-market between 5 o'clock and 6:20. If there's no news at 5:30, then I'll trade all throughout this morning. If I want to hop into something that looks really good, or if there's news, I'll wait for price to react to it. So I'll wait for price to move after the news event, and then I'll take trades after I see trades in that direction. So right here, pre-market 5 to 6:20. And then obviously you guys know my trading time 6:30 to 8 o'clock. And typically I'll like be out until like 9, probably go get breakfast or something. And then maybe from like 9 till 12, I'll look for some trades. If I'm like really, if I really feel like the need to trade, I'll trade between 9 o'clock and 12 o'clock. And you can see right here, this is why, right? Price is still going sideways around here. So there's no entries at this point, but you can see like once it gets closer to 10, price starts to move directional to the upside. So that's typically where I start looking for entries. So again, between 5 o'clock and 6:20, and then from 6:30 to 8, we're on live. 8 o'clock to 9, I'm usually taking a break, and then I come back on at 9 if I really need to trade from 9 till 12. From this time here, market closes at 2 o'clock, I believe. Between 1:30 and 2 o'clock, the market closes. You guys can see the turnover right here. And I don't trade until like about 6 o'clock. So let's see. I think like it's considered 1,800 hours. Yeah. Over here. So you can see how the market's kind of choppy. When the market opens right here, there's like literally no movement. If you were to measure the movement here, it's like almost impossible to catch 100 pips, or it'll take forever. So this is a 100 pip move right here, but then you also have to cover spread. So you're actually looking for like maybe something like this. So imagine you taking a trade here. These trades would take like 20 or 30 minutes for your trade to hit, right? So I'm not looking to mess with that here. If I trade at night, I'll typically trade right here between 6 o'clock and 10 o'clock. So, I mean, I'll put it up right here so that you can see. And this just comes from experience. I've been trading for a long time. I know when the market actually moves for US 30 specifically. That's why I only trade around these times here. So my trading times, pre-market, 5 a.m. to 6:20 a.m. Pacific time. New York session, 8 a.m. to, or sorry, 6:30 a.m. to 8 a.m. Then 9 a.m. to 12 p.m. And then Asia session, 6 p.m. to 10 p.m. So the reason why I stopped trading around 10 p.m. is because the market starts to move kind of funky around that time. That's when market starts to prepare for London session. So I usually stop trading right here because you guys can see how price is kind of moving directional right here, and then all of a sudden it starts to move kind of crazy as you get closer to London Open right here. So you see how like price will go sideways for a bit, it fakes out below, fakes out above, and then comes down super heavy. So I definitely stopped trading around 10 o'clock. That's usually where so the way that I figured out these times here is because I would document my trades, right? If you guys have a journal, I recommend journaling your trades and then just paying attention to the times that you lose trades. Whenever I lost trades, it was outside of these times. So that's why I cut off at 6:20, because I want that little gap between 6:20 and 10, or 6:20 and 6:30, so I don't get caught in like the crazy volatility pre-market. Especially if you're scalping. So I lost a lot of trades between these times because what would happen is I would enter a trade at like 6:20 and then market just goes flat until 6:30. As soon as the market opened at 6:30, it would spike to my stop loss. So I'm like, I'm not going to do that anymore. So I usually cut off around like 6:20. And then for New York session, I trade between 6:30 and 8 because that's where volatility is high. Then I take a break between the little pause between 8 and 9 because market starts to consolidate. And then I come back between 9 and 12 if I want to trade at that time. And then Asia session, I start at 6 o'clock because the Asia session, well, Australia market technically opens at 2 p.m. Pacific time. But the volatility is so low because the Australian market is so small. So the market will be super slow between like 6 and 4. 4 o'clock is when Asia session opens. You start to get some crazy movement, but there's no clear direction. Once you get to 6 o'clock, market starts to smoothen out. So you can see right here, market kind of moves a little crazy here. On Asia Open. So you can see right here, Australia opens right here. So the first 2 hours, there's like literally no movement. If you're to measure the price movement right here, it moves like maybe 100 to 200 pips, which is not very much because you have to cover the spread. So you basically have to cover double that. So if you're going for a trade right here, you have to hold on to a position like this. You're going to be in it for like 30 minutes or so. You can see here at 4 o'clock, market starts to pick up a little bit because Tokyo opens. Market kind of bounces around, fakes out, comes back down, flattens out, and then it starts to smoothen out right here at 6 o'clock. So I'll trade between 6 and 10 sometimes if you guys see my Asia session trades. And then you can see over here at 10 o'clock, the market starts to move a little funky. It starts to go sideways again, fakes out right here, fakes out up here, comes right back down super heavy. So, and this is all just from past experience. I've lost a lot of my trades outside of these times. So that's why I decided not to trade outside of these specific times here. Yeah, no problem. And yeah, you should definitely use that to practice. I think it's pretty useful. Question from Johnny. Johnny's asking, what account should we go after? We are comfortable with trading 25K. I mean, it's really up to you, Johnny. Like, because the thing is, the numbers don't make a difference, right? Like if you're good at trading, it doesn't matter if you have $1 account, $100 account, $1,000 account, you're still doing the same thing. So it's just really up to your preference. If you feel comfortable and you're ready to go, then if you're asking me, there's no reason for me to go for a 25K account, right? Because I know what I'm doing. But if you don't feel comfortable with it and you still feel risky taking big trades, then obviously, start with a smaller one. It's up to everybody. Like it's up to your own preference. It wouldn't make a difference because you're still risking the same thing. Like I think that's the thing that kind of throws people off is that you guys start to see bigger numbers with regard to profit and risk, but realistically, or I'll just put this, no matter the account size, you're still risking same percentage, right? So it doesn't matter if you have a doesn't matter if it's a 25K, 100K, 200K, 400K account. Your max risk per trade should be 1% to 2%. So it wouldn't matter. It's just the numbers get bigger if you're using a bigger account. So it's just really up to preference. Johnny, if you feel comfortable, then, go for the bigger account. Just for because if you're trying to trade for, I know you want to trade for a living eventually, right? And you want to make this a big thing. For me personally, you look at the numbers for 25K, it just doesn't make sense. You can't live off a 25K account, right? I mean, technically a person could, but if you think about it, so on average, if you're trading, for me, if you look at the scoreboards on FTMO, people aren't really making that much. You'll see some people make 20%. That's a big number per month, right? For me, I'm barely clearing maybe 10%. So if I'm using a 25K $25,000 account times 10%, I'm only making 2,500. This is not going to cover my expenses. So there's no way I do a 25K account because I trade for a living. For you, it's different because, some people still have a day job. So you have other income coming around. So a 25K would make no sense for me to trade that account size. I'm on a 400K account, right? And I'm making maybe around 10%. So if I'm doing a 400K account and I'm making 10% of that, yeah, I can live off 40K a month, right? Because this will meet my criteria more. So it's just up to preference, right? It depends on what level of trading you're at, because it's just your profit changes, your profit and risk changes, but you're still risking the same amount. So your lot size will change. It's just, you'll see more profit, obviously, if you're in a bigger account, but you're doing the same thing. Strategies don't change. You're just changing your lot size. Does that make sense, Johnny? Because for you personally, I would probably, I don't know how confident you feel with your positioning or with your trading, but if you feel really confident, I think a 50K account would be a good start. Because again, if you do a 50K account, I'll do the math again, just basic math, 50,000, making about 10% a month. And this is being conservative, not conservative. This is actually being aggressive, because typically I don't even go for 10%. I go for something smaller. This would be a 5,000 profit per month. So, and on the lower side, say for example, you're on a $5,000 account or $50,000 account, and you're going for maybe 5% a month, you'll make 2,500. So it's really up to preference. But for me personally, you guys know that I trade for a living. This is all I do for the most part. I make most of my money from just trading. I have to go for a bigger account size. So everyone's different. There's no rush to it though, because you can always go from a 25K and then say, for example, you do a 50K and then at the end, you want to merge that into a 75K account. They can do that for you. So yeah, it's just really up to preference. But I think a 25K would be too small. I would probably go for at least a 50. Other than that, let me see if there's any other questions here. Question from Nice. So Nice is asking, could you go over the SR strategy you mentioned before it was good in these types of conditions? Yeah. So the strategy that I was referring to during the live session today, that was the one that I think Dejan was applying, was the SR rejection. Where did I put it at? I got so many. I got to clean this up at some point, guys. One of these days, I'm gonna clean this up. I got so many strategies here, and I gotta list them differently so that it's easier to find. I think it's this one, the high SR rejection strategy. Okay, so let me just show you an example from today, because John saw a couple entries today. I actually really like this strategy. This is a strategy that we used a lot. I don't know if you're around in the summer, Nice, but like during the summer, we have a lot of sideways movement. It's a ranging market. So this strategy is actually really good for a ranging market. When market's going sideways, this is perfect to catch entries. So obviously this morning we were looking for sells. First, you want to identify. So for a sell here, confirm trading in the direction of trend. So obviously we're in a downwards trend here. You want to make sure that price is below the pivots and the trend meter is red. So we'll start from up here. And second, you want to identify a top wick rejection off an SRV2 zone with a moderate red candle. So let me go over here and turn on the SRV2. So you absolutely need the indicators for this strategy. I know a lot of you guys try to mimic my strategies on your own, but for this specific strategy, you're not going to be able to pull up these zones without the SRV2. So unless you guys have the indicators, it's going to be nearly impossible for you to take any of these entries. So I'll show you one of the examples right here. All right, so looking at this right here, I'm just going to draw my own zone over it because it's easier to see. So looking at the requirements here, first requirement is confirm you're trading the direction of the trend. I'm going to go ahead and just replay to this candle back here because this is the entry. All right, so first step, confirm trading the direction of trend using the K2 trend meter and the K2 pivots 3 and 4. So basically you want to make sure that price is below the pivots and you want to make sure that the trend meter is red. With that said, you have step 1 right here confirmed, right? Once you confirm step 1, you move on to step 2. Identify a top wick rejection off the SR zone with a moderate red candle. So that's going to be this candle right here. The SR zones, in order to get the SR zones, you just have to turn on the SR indicator. So I have the SRV2 indicator right here. When you turn it off, there's no zones. When you turn them on, there are zones right there. What I did here is I just drew my my zone over this zone here. So I don't have this mess here. It's easier for me to just see if I draw my zone right there. I drew it from this one. I'll turn off this indicator and we have a clean markup right here. So this requirement too comes with 2 different criteria. So first you want to confirm the wick rejection and you want to make sure that it's a moderate red candle. So you want to see a red candle that's rejecting off structure, but you want to make sure that it's moderately pushing that direction. So for example, here, I would consider this a moderate red candle because there's a wick on the top and a wick on the bottom, but the wick on top's way bigger than the wick on the bottom, right? The wick right here is very small compared to the top one. The candle prior to this, so if you look at this next candle right before it, this is not a moderate red candle, right? Because this candle right here is rejecting off it, but this candle has a huge wick on the bottom. So what this tells you is that there's some support right here that's getting hit. So this would not be considered a moderate red candle. It doesn't have to be strong. This red candle right here would be considered strong, right? This one. Because you can see there's no wick on the bottom, but there's a small wick on top. So this is considered a strong red candle. This one right here would be considered a weak red candle because there's a big wick on the bottom. It's going against the direction of the trade. For this one right here, this would be considered moderate because it's not very strong, but it does fit the criteria. So with that said, that's going to be step 2. For step 3, you want to confirm that you're trading in the direction of momentum. So you're pretty much just riding this momentum lower and lower. You can see right here, we have a sell signal. There's no buy signal prior to that. So we know that we're trading in the direction of momentum. With that said, you would enter the trade right here on the next candle for a sell, which would be right here. Have it for a 1030 split. You let the trade run, full TP on the next candle right there. See, perfect entry. So this strategy works really good in ranging markets. I'll see if there's any other entries here that would come up. I'll just keep moving forward on the chart. I'll see if there's another example that we can possibly look at. I think there was one like right here. Check this real quick. Oh, this one right here. Okay. So there's one right here, actually. Let me go on, draw a zone right here. All right, so here's one more example right here. Let's look over it kind of quickly. Turn this off. All right, so again, right here, you want to confirm that you're trading the direction of the trend. You can see our price is below the pivots, trend meter is red. Pivots are angling down. Second, you want to confirm a wick rejection off the SR zone. There's a wick rejection right there. You can confirm that this is a moderate red candle. So this is the caveat to this strategy here. This is, I think, where a lot of people kind of have a difficult time identifying what's moderate and what's not. So like the main thing that I would look at is I would compare the wicks. So for example, here, the wick right here is pretty big on the top and the wick on the bottom is very small. There was another entry right here that came up, but I wouldn't consider this a moderate red candle because the wick on top is so big, but it's almost the size of the body of the candle. And then also the wick on the bottom is also big too. So you got big wicks on both sides, not necessarily the type of entry you would want to get into. And I think this candle here would also be a little too big. Yeah, it's just too big because the candle prior to entry can't be more than 300 pip drawdown. So this right here would not be an entry, but this right here would have been another short position right here. Same split, 1030 split. And you're pretty much just waiting for this to come down and hit your TP. You let the trade run, it goes straight to your TP on the next entry. So this strategy is actually a good one that we could technically be using right now. But, you know, as I mentioned, I'm not going to add this to the lineup until we have, like, if the market continues to go sideways, then I'll add this to the lineup. But this is more complicated for new traders. That's why I don't really want to teach it to those specific traders. Like this strategy is good for more experienced traders because they can confirm, you know, what's a moderate candle, what's not, versus other traders who can't. There's another entry right here as well. So you can see there's a lot of entries here that actually came up. So again, right here, there is another one. There's actually a lot of these that came up right after each other. There was one right here. Short position. Again, 1030 split. This is a strong red candle. So this one right here is actually a really good one because there's no wick on the bottom at all. Strong red candle right there. Kind of bounces around a little bit. So this one's technically running, and there's actually another one right after it. This red one right here. So they kind of overlap with each other. See another one right there. Let's see if there's another one here. No. I think that might be it. So there's two entries that came up right there. You see this big red candle right here, pretty much knocked all of them into a full profit target. So not super difficult, but you know, it's a little more difficult for the new traders to apply. And this is pretty much the SR rejection scalp strategy that we typically apply in the summer. I'm hoping the market moves directional, but if that's the case and the market keeps going sideways like this here, like you can see from here, these candles were going sideways for a long time, maybe like 10 or 20 minutes. It's a long sideways movement here, but you can see that there was like 4 or 5 entries that came up like within this whole vicinity right here. So I think it's a good strategy if market's going sideways like it has been, but we're going to stick to the main strategies for now, and then we'll move on to this if necessary. Yeah, no problem. Nice. You know, if that's the case, then we'll start applying it during live. But I think for the moment right now, we're going to stick to what we're currently applying. Oh, you're right. Yeah, CT, sorry. So CT confirmed that there was no sell signal here. So there was actually no entries on these parts here. So thanks, CT, for the heads up on that one. Let's see, another question from Medvest. Medvest is asking, yo, Sean, can you please tell me which of your strategies would you recommend to someone to learn first, for someone who is not a total new in Forex, but already about 1 year? So I would recommend only focusing on the strategies that we're applying on the live session. So like, you know, like you mentioned, well, and not like you mentioned, because basically you're asking, so like, what's a good strategy for someone who is not new, but is in for a year? The thing is, if you're in for a year and you haven't figured out your trading style, then that's a problem, right? I've listened to a lot of interviews with a lot of traders, well, like a lot of successful traders and a lot of like prop firms and big trading companies, not necessarily any of these YouTube traders or anything like that, but these actual like legit hedge funds and stuff. And I think that for them, the hardline rule with them is like, if you don't get trading or you don't figure out like the type of trading style that you like within the first 2 years of trading, then trading is probably not for you, right? Because the thing is, you don't have an interest in trading. If you had a real interest with trading, you would figure something out within that time period. Not to mean that like, you shouldn't be trading, but for the most part, I think, to be good in trading, you have to have an actual interest in it. Like you actually have to want to trade. You can't just like pick up a strategy and then expect it to work for you, right? Because I've been providing these strategies for like years now. You'll see in the group that there's a handful of people who do very well, and there's a handful of people who don't do very well. The people that do well actually like trading. The people who don't do very well is they think they can just pick up a strategy and expect it to work automatically, right? You have to actually want to put in the work and learn it. So with your question, Medvest, all the strategies work. Honestly, you could use any of my strategies and they all work. Like I can pull up any strategy for you right now, and I can show you that they've been working for years. So, like, I don't want to say that it's like not for certain people, but like realistically, that's really what it is. Like you have to like want to trade and you have to want to learn. Here, let me see if I can pull up my strategies real quick. I can literally pull up every single strategy here. Right here, I'll just show you real quick. So I can just pull up my list over here. And I can show you literally every strategy. Every strategy works perfect. It just depends on the person. If the person wants to put in the work to actually learn this stuff, then they can do it. But for the most part, if you want to just focus on like what we're doing now, then that's perfectly fine. So like basically, if you were in the course, because I feel like that's a big misconception with a lot of people. A lot of people think that there's like a golden strategy out there. There's no golden strategy. You just got to figure out what works for you, and you got to stick to that. I've been trading live for like 5 years now. So the main thing is you should just apply the strategies that I'm applying during the live sessions. If you would do that and you would just stick to it, then not you specifically, Mevis, but like anybody in general. Man, I hate how the course changes. Okay, sorry guys. They changed like the whole setup of the course, so I don't know how to pull it up, but I got it here. So if you were to like pick up trading and you want to be somewhat consistent, I would just focus on anything here with the 2.0, right? Because this is what we do on the live session. So, I mean, it depends on like what you want to trade. If you want to scalp like we're doing on the live sessions, then yeah, these would be the main strategies to follow. If you want to be an intraday trader or a swing trader or a day trader or anything like that, you can apply any of the other strategies here. What you can do, what I've been telling people as well who want to trade, outside and they want to trade on higher time frames, you can apply the momentum scalp strategy, but do it on a higher time frame. So that's basically what I was doing over here for these Forex pairs, right? Let me refresh this. It's been days since it. So like if you want to trade something like this, this is the same strategy that we were applying. This is the entry that I took last week, actually. So this one right here, it's the same strategy that we do for US 30, but it's just done on a different time frame. So I actually took this last Friday because someone in our group actually asked like, hey, what strategy should I apply? And I was going to go use this strategy. So let me see if I could find an entry here. Okay, so there's like one, it was actually two right here. Let me just replay it from here. All right, so this is the same strategy that we're applying for US 30. So for US 30, we're applying the momentum scalp strategy. And then you can apply it on Forex, but on the higher time frame. So like for Forex over here, I would apply this on the 8 hour, 4 hour, and 1 hour, because Forex is it's a slow moving asset. And you probably have to be holding on to this for, quite some time before it hits. So like, for example, right here, we have a downtrend, right? Because price is below the pivots, trend meters red, pivots are angling down. With that said, if you were to enter a sell right here, so you have one sell position right here, or a sell signal, I guess. And I'll go and just take off the gold bars so that there's no confusion. So you got a sell signal here, sell signal here, sell signal here. It's in a bearish downtrend. You take a short position right here. You place your stop loss at the previous swing, which would be up here. We'll just round that off to 60. So 60 pip move right there for GU. You would take the trade at this point, let the trade run. And the same strategy works perfect here, no drawdown. Right, so that's one of the entries right there. There's another one that came up right here prior as well. Same exact thing. We're here in a downtrend. Price is below the pivots. Trend meter is red. Pivots are angling down. You have a sell signal here, sell signal here, and the sell signal here on the 1 hour is going to be the catalyst, right? So you make your entry over here on the sell signal. You'd have your sell entry at this point right here. Stop loss will get previous swing right there. Just round that up to 40. I like using whole numbers. It's easier. And then you do the same thing with the trade run. So this strategy is the same thing as the intraday strategy. So if you guys have been following my strategies for a while now, this strategy, like the momentum scalp, is like a little different, but it's pretty much the same strategy as the very first strategy that I've ever taught you guys. So I used to teach you guys a strategy called the intraday strategy, right? It's pretty much the same strategy. The only difference is that we're using multiple time frames to confirm the direction. But I mean, realistically, it's the same exact strategy. So this one over here, the K2 Trades official intraday trading strategy. If you look at these videos here, this strategy is literally the same thing. It's just done on a different aspect because you're looking at now the 4 hour and 8 hour. Before you would just look on like this and you would use the trend meter. And I think the way that I taught you guys originally was to just adjust the trend meter settings. So you're basically doing the same thing. It's just the settings are a little different. So like, for example, here, instead of using multiple time frames to check your charts, you would just use, so if you're trading on the 1 hour, you use like 30-minute, 1 hour, 2 hour, and 4 hour. Right. So this might not have lined up with it because the trend wasn't as strong. I think this one would. Okay. So if you guys have been with me for a while, you guys remember the strategy, right? This was like the very first strategy I taught you guys. And all you were doing is you were matching the colors. You would make sure that the trend meter was red and you'd make sure that the momentum signal is red. So if it's red and red, you take a sell entry right there. And the crazy thing is that this strategy is so simple, but a lot of people still screw it up. So that's why I had to create different variations to it, because I thought it was like, I'd have to make things a little different for people to understand. But this strategy is the same exact strategy that I taught you guys like 7 years ago. This strategy's been up for like 7 years now. People don't even apply it anymore, which is crazy, and it works perfectly fine. So like, if you look at all my strategies, guys, they're pretty much the same thing. There's small variations to it, but they're pretty much the same strategy I've been teaching you guys for like 5-7 years now. So let me see what Medvest said. So Medvest said, I like your US 30 daily strategy and the 10-minute. Well, if you like that, then you can apply that, right? There's no problem with it. I just think that that's a lazy way of trading though, Medvest, because you're kind of like banking on like this one move, but I can already guarantee that you're not going to take every single trade, right? Like the thing, if you want to take a trade like that, which is a daily strategy or like something that you take once a day, you have to take that strategy every single day. You can't just take it one day and then one day you're thinking, okay, I don't feel comfortable with it. You don't take it because that strategy has been tested to work in the long term. So if you took, like how many days of trading are there in a year? Like 300 days of trading, right? That strategy has like maybe a 65% win rate, not a very high win rate, but if you take every single trade for every single day, eventually it's going to balance out, right? So if you took and it's not just you. I know everybody does that. Everyone thinks it's such a good idea to take the daily entry, but they don't take every single entry like they're supposed to. And then they get mad when they're not in profit, but then they're super happy when they're very in profit. So if we go back and look at those entries over here let me go to the clean chart. So I could go over here on the 10. And that's the thing, like trading is a game of probabilities, but a lot of people still don't understand that, which is kind of crazy because that's what trading is. It's literally a game of probability. So if you were to take the trade from, say, today, right? So if you took the daily entry from today, it would have been a sell, right? Market open here at 6:30. First momentum signal here was a sell. You would have taken that for a sell for 1,500 pips. And it would have basically hit your TP, I guess. Yeah, so went straight to profit target, no drawdown. So there goes the daily entry right there, right? This is like the easiest strategy that you can apply, but people still don't have the consistency to keep it up long term. So this is the one from today, this morning. It would have been a full TP. I think one of the people who still applies it is Kip. He's probably one of the main people who still applies it. Let's see, there's another entry right here, but you wouldn't take the daily on Friday because obviously volatility is too low. So you wouldn't take the Friday one. Thursday, let me see what the Thursday one looked like. So Thursday right here, it looks like, I can't remember if there was news. There's a lot of like other factors to look at when you're taking the daily entry, but you should be taking, like, if you were to take this strategy, you would basically just take every single entry that came up. This one looks like it might have been a loss. It looks like, yeah. Well, then again, here, let me put the requirements for the daily entry. Yeah, you're just looking for the first entry that comes up. So there's a couple different ways. So like the way that I used to do it before is I wouldn't even look at the overall bias, right? But I think the overall bias does help. So if you were looking at the overall bias right here, I don't think you would have taken a buy at this point, because I think overall price was probably, well, there was no direction at all on I mean, for this like entire month. It's a little more difficult to follow these. But say, for example, you were just to take these trades and not even look at any of the criteria. Let's just look back to the previous entry. So this one right here would have been a loss. The one from today would have been a win. See the one from Wednesday. There just wasn't any direction. So it's kind of difficult to take these daily entries. See this one over here. Looks like it would have been a loss because there's no direction. Like you have to have some sort of bias. Like this kind of faked out. I mean, this is basically what's been happening all February. This is a fake out right here. Let's look at on Tuesday. There's no entry here that came up on Tuesday. Well, no, there's no momentum signals in between 6:30 and market close. And then here's Monday over here. All right, so Monday's entry is right here. But there was like barely any market movement on Monday. So if you look at the data right here, Medvest, so there's a win here on Monday, full TP. It took a long time to hit, but it did hit full TP. There's a loss here on Wednesday. There was no trade on Tuesday. Loss here on Thursday, and then a win over here on Monday, right, today. So if you do the math here, this would be a break even. If you do this consistently every single day, then you'd end up in profit, because we've done the back testing like years and years back, and we did find that this is profitable long term. But the problem with most people is that they don't want to do it long term, right? They want to see those instant results, and in order for you to see the instant results, you got to find instant strategies. You can't be trading lazy like this, you know, taking 1 or 2 trades a week and then kind of fall off, because you can't take any breaks for taking this type of strategy. So you guys can see the strategy works fine, but you have to apply it every single day. You can't take any days off, because if you take a day off, that could be the day of a winning trade, and that's going to skew your results. So, all right, that's it with that right there. Natasha is asking, can you show me again how to add the 8-hour time frame on TV? Yeah, so to add the 8-hour time frame, you go over here to your time slots, and if your 8 hours is there, you'll just go down here, type in 8, click on this right here, go to hours, and then click add, and it'll add the 8-hour right there. Natasha. Yeah, no problem. All right, next question is from Chase. Chase is asking, can you go over steps 4 and 5 for the momentum scalp variation? Is there a certain number of candles for price to close past pivots in retracement or correction? Yeah, let me check that out for you, Chase. Okay, so let me go back over here, or I'll just answer your question because I can just answer directly. So let me just go over your question again, Chase. Chase is asking, is there a certain number of candles for price to close past pivots in retracement or correction? So no, there isn't. The momentum scalp variation happens when it happens. It always happens after a momentum scalp failure. Typically, sometimes it'll happen on the same entry. So I'll see if I can find some examples here, and I'll show you, like, sometimes it'll happen right away, and then sometimes it'll take a long time for it to play out. So let's see, there's one right here. It's at the sessions though, so this wouldn't be an entry. Here, let me replay it from here. This is like close to the end of the session, so there wasn't really too much opportunity here. Okay, so these both happen at the same, like on the immediate next candle. So there's a momentum scalp failure right here, and this one happened right after, right? So these happen within one candle. That's an entry right there. I mean, we wouldn't take it because it's right at the sessions, but just using this as an example, this would have been the trade, and that would have been a full TP right there. There's another one over here. it happened again right on the next candle. So typically it'll happen like immediately or like within the first few candles, but not always. So these two right here, both full TPs, they happen right after the first candle. Again, this one right here, same thing. It happened right after. I don't know if we're going to find too many where they happen spread out, at least not for today. I know last week there was a lot where they came super late. Again, right here, another one, but it happened like right after. So most of the time, you guys are going to see a lot of these that'll happen right after the initial entry or right after the initial retracement. So like for your question right there, Chase, like, basically the retracement can happen and correction can happen within like 1 or 2 candles. Typically they do happen within the first couple candles. Let me see if there's another one over here. Okay, so here's an example where it happened a little later. So there was a momentum scalp variation here. I'm just going to clean it up a little bit so it's not too messy. Or actually, so I don't know what the trend was looking like at 10 o'clock because I wasn't trading. I'm assuming it was bullish, but I guess we'll use other examples down here. Or I'll just use this one to show you. I don't know if this was an actual entry, but I'll just show you that this one came up like a little later. So we have one right here, but the entry didn't come up for like 2 or 3 candles later. So the retracement happened here, and then it was like 1 or 2 candles came back below here, like on the third one. And that also would have been, full TP. I'm trying to find one where like it took a really long time for it to close below, but for the most part, it usually happens right away. Yeah, Chase said, okay, that helps. I've seen both scenarios and wanted to make sure that trade doesn't get invalidated. Yeah, so there's no way to really invalidate it. The only way that it gets done is if it happens, right? So you have to wait for it to play out. If it plays out, there's only one entry for it. So like typically you'll get a momentum scalp failure, like I was showing you guys earlier over here. You get a momentum scalp failure and then you have a variation, right? After that, you got to wait for it to reset. Like you can't have price retrace up and then close back below and there's another one there. There's only one that can happen. So, you have one here, you have an entry at that point. You wait again for price to retrace up, you get a buy signal here, another one comes up, that's the second entry. You wait again for the next retracement, happens here, and then it happens, and then entry comes right after. So I think that's one of the main problems a lot of people have is that they try to take like every time price closes below, right? So price closes below here and they're like, okay, this is a momentum scalp variation. You're correct with that. But then they see price pull up again. They're like, okay, there's another one here. There isn't another one there because this one's still running. This one's the actual entry. And then people will see it pull up again right here. And they're like, okay, there's a third momentum scalp variation. But I'm like, no, there's only one. So I think that's one thing that a lot of people get confused with. But seems like you understand, Chase. That's cool. Let's see. And then your second part of your question is it mandatory that the pivots be angled up, or can price just be trading above the pivots when confirming the trend for step one? So they don't necessarily need to be angling up. The thing with the 1 minute here is that, so let me see if I can find an example here, because sometimes you'll see where price is, it's super bullish on like, let me see if I can find it over here. Because like sometimes the 1 minute's so fast that you'll see this one kind of be a bit off compared to like the 5 and 10. So looking over here, pre-market. Okay, so I think this is a good example over here. So I think, yeah, this is the same entry that we took this morning, I believe. Yeah. So looking at this right here, I'll just replay it so that you guys can see all the charts here. So looking over here on the 5 and 10, you can see that price is super bullish, right? So like, obviously you're looking for a buy here, but you look over here on the 1 and it's super messy. So it's not really necessary. Like the 1 minute is kind of just, like it doesn't have to be super clear, right? Let me just maximize this. So you guys can see here that it's bullish. And you can see it's bullish on the 5 and 10. So you don't have to look at these anymore. You already know it's bullish. Going over here on the 1 minute, this is where it gets a little tricky, because I know like people try to follow things right by the book, but if you look at this here, price was already bullish, right? So price has been bullish down here. It's been green. Price has been above the pivots. It's been pushing up. This is just a retracement. So price retraced down right here, but we already knew price was going to correct back up. That's why I took this entry this morning, because I saw price pushing up and already had an idea that it was going to keep pushing up. I looked at this here and I was like, okay, this is going to be bullish. I looked at the 5 and 10 over here. I was like, this for sure has to be bullish because, you know, everything here is pushing to the upside. I even looked here on the higher time frames and everything was bullish. So I was like, okay, if this is all bullish, then price has to push up at least like 100 pips to hit my TP. So using this as an example right here, Chase, they don't have to be angling up. Like they can still be sideways, or I mean, the trend meter doesn't even have to be green. As long as everything lines up for everything here being a buy, 10-minute was a buy, 5-minute was a buy. I think the 1 hour, 30-minute, 10-minute were a buy here as well. Then you can assume that the 1 minute's going to follow, because if everything's bullish, then this one right here is likely to follow, right? Because this is like the weakest time frame to follow. As long as you're looking on the higher time frames, eventually price may retrace a little bit like it did here. So this was a bit of a tricky entry because price did retrace down a little bit. So you can see price kind of went back and forth for a bit, but eventually it corrected back to where it was supposed to go, which is up, right? So yeah, you don't necessarily need the pivots to be angling up. You just have to have you have to have a good idea as to what the overall bias is. So the 1 minute can still be bearish or it can be neutral, but as long as it's very bullish on like the 5 and 10, then you know, it's fine. It's good to go. Let's see, Chase said, so when confirming trend on all time frames, as long as price is above the pivots, but pivots aren't angling up, we're good. Yeah, no, it's fine. I think the pivots are the best indicator to identify trend, especially on the shorter time frames, because everything here was bullish already. So you already knew that this was eventually going to correct back up. So yeah, the pivots, the angling of the pivots is probably the weakest confirmation that you're looking at. I think the main things to look at would be where price is with regard to the pivots, and then the trend meter. So the steps of confirming trend strength is going to be where price is, whether it's above or below the pivots. Second, it's going to be the trend meter. And then lastly, it's going to be the pivots, which direction they're angling. Because you'll see sometimes over here, like you can look over here on the 1 hour, and this one doesn't shift as much. So if you're looking at this here, you can see prices below, but then like you can see a price is kind of coming below right here, but then the pivots are angling down and it's just correcting back to the downside. Or for example, right here, price is closing above it. So if I was to see this right here on the 1 hour, I would still consider this bearish, even though these pivots are angling to the upside. Because I know, okay, price will probably push up slightly, but it was still bearish. I'm expecting it to, you know, obviously come right back down. Right there. Yeah, and these are just hints. Like you guys got to keep in mind that these confluences, they're just hints, right? They're not an end all be all. There's always different confluences you can use to make confirmations, but for the most part, that's how I personally look at it. Yeah, no problem, Chase. Yeah, if there's any other questions, guys, feel free to put your questions in the chat. Let me see if there's another question here from Natasha. Natasha's asking, can the variation happen more than once before the momentum scalp? So no, yeah. Oh yeah, okay, so we did cover that. Yeah, so for every entry over here, Natasha, there's only one that can come up. So looking over here at the strategies that we're looking at, there's only one at a time. And then after one of them has happened, it has to reset again. And that's why we like applying these strategies here. That's why I focus mainly on these, because these strategies give you guys, like it basically gives you some waiting time in between looking for the next entry. So that helps with the question earlier where we were talking about over trading, right? I forget who asked about that. Shaka. So Shaka was asking about over trading. The good thing about these strategies here is that they can only come up once. So like once you have this one done, then you got to wait for this one to come. And then once this one happens, you got to wait for this one to happen. You can't be looking for like 2 momentum scalp failures that happen right after each other. It's like this one first, then this one, then this one, then it resets. We're back to this one, then this one. So I think this is like one of the best order of strategies to apply, because it kind of forces you to take a break and it prevents you from over trading, because you have to actually wait for the next entry to come up. And since I skipped this one over here, I usually have like some waiting time in between. So all right, if there's any other questions, guys, feel free to put your questions in the chat. Otherwise, I think we might be wrapping this up for the day. We've been on this session for about an hour and a half. So I'm glad you guys came out with questions. Really appreciate you guys bringing questions to the chat, because I know a lot of you guys have questions. You guys are just scared to ask them, right? Which is fine. You guys got to remember, like, The only way you guys will get better at trading is if you guys get the help that you guys need. If there's a problem that you guys have with over trading, revenge trading, following directions, just drop your question in the chat. I can probably give you some tips. Again, if you guys haven't read the books that I recommended, I'll put the books up here again. The books that I'm reading or that I've read, I just bought this book too, Unknown Market Wizards. Pretty much every month I read a new book. This book right here, Jack Schwager, he interviews basically the best traders that you've never heard of, like people who are making like millions of dollars trading. You're not going to see any of these people on YouTube or any like that because they want to be hidden. Like for me personally, I don't really advertise my strategies anymore because I don't want random people to be using my strategies, right? If you guys are part of the group, great. You guys are more than welcome to keep using my strategies. But, in order for me to make the most money in the market, I don't want people to be doing exactly what I'm doing. So for me personally, I'm starting to read this book. Sorry, 1 second, guys, got to sneeze. Yeah, so this book right here, if you guys, this book's kind of expensive, so I don't know if I'd really recommend it. I haven't read it yet. The books that I would recommend that are a must is going to be Trading in the Zone. Of course, this is number one. Number two is going to be One Good Trade. This is like, an inside look on like one of the world's most successful prop firms. Not like FTMO, it's like a legit prop firm. And then this one right here, the Daily Trading Coach. So I'm still listening to this. I have about 12 hours left on this. Once I'm done with this book, I'm going to go on to this book right here, Unknown Market Wizards. Some of the best traders in the world that you basically have never heard of because they're so under the radar, kind of like how I want to be. Like I'm pretty good and consistent with my trading and I want to stay under the radar because I don't want these market makers and institutions basically either copying what I'm doing or do the opposite, where it's going to like screw up my trades. So I prefer to make more money from trading. I don't really want to sell anything to people anymore. So like the website's still up and you guys can still sign up for stuff, but I'm not really advertising or getting people to the website because, the less people that use our strategies, the better, because we'll just stay profitable all year round and we'll keep staying profitable as the market changes. I've been trading for a long time. So like, even if the market does change, I can make small adjustments to my strategies and we'll still find profitability no matter what. But for the most part, I think we have a pretty good set of strategies right here. Like these three are perfect. So I just want to keep using these and have no issues and just, stay on track. So, all right, guys, I think that's it for now. If you guys have any questions, feel free to reach out. You guys can message me on Telegram or message me through email. My email is sean@kodikaitrades.com. Otherwise, if you guys have any questions, feel free to reach out and I'll see you guys back here tomorrow. So, all right, guys, if you guys have questions, reach out. If you guys have more profits to post up, go ahead and send them up. I'm going to post up the profit shortly, and then we will continue on with this tomorrow. So, all right, guys, I'll see you guys tomorrow morning. If there's any questions, reach out. Otherwise, I'll see you guys for the next live.